Section 3, Cost Behavior, Level B. What effect does changes in the activity level have on the fixed cost per unit? Well, as activity increases, fixed cost goes down. So A, no effect? No, it will change. An inverse effect? Yes, definitely. A directly proportional effect? No, it depends on the activity level. No, the answer here, obviously, is B. What happens to manufacturing costs when a company's activity level decreases? Cost per unit should remain the same if in the relevant range? No. No, cost per unit would go down, or it would go up, the fixed cost would go up. Most costs will rise? All unit costs will remain the same? No. Some costs decrease, others will remain in total. Yeah, variable costs will decrease, but the fixed costs remain the same. So the answer is D. The increased use of technology and automation in companies has created a trend that has increased a particular cost. To which cost has this trend caused an increase? Well, as I automate, I am putting in more machinery. And, of course, the depreciation cost on that machinery is a fixed product cost. So, as automation increases, fixed costs increase. Ross Company incurred an increase in the level of activity. What are the effects of this increase on the unit costs for variable and fixed? Decrease in unit variable costs? No, that's not true. Both variable and fixed costs per unit increase? That too is not true. Increase in unit fixed cost and a constant unit variable cost? No, it's the opposite. A constant unit variable cost and a decrease. Not an increase, a decrease. So the answer here is D. 5. At the high level of activity in October, a company used 6,000 machine hours, resulting in a utility cost of $12,000. In March, a month of low activity, 3,500 machine hours were used, and utility cost totaled $7,500. If the company uses a high-low, how much is just the fixed cost? Well, we have to figure out the variable first. And we want the change in cost, which is $12,000 minus 7,500 over the change in activity, which is 6,000 minus, 3,500. And when I work that out, I get $1.80 per unit. Okay, now this is the variable cost. So the fixed cost, at the high level, the fixed cost was $12,000. Okay, what portion of that 12 would be variable? Well, I take the activity at that level, which is 6,000 times $1.80, and I subtract it from the 12,000. And what I will get then is 1,200. That's the fixed cost, and so your answer then is D. If sales doubles next month, what is the projected net income? Well, Christie Manufacturer has sales of 10, and if it doubles, then sales would be 20. Okay. Variable cost would also double because the variable cost changes in total in direct proportion. So the variable cost will be 6, and the contribution margin then would be 14,000. I take off the fixed cost, which is 5, and my answer is 9,000. And therefore the answer is C. Kim Manufacturing provided the following information last month. Sales, 12,000, variable cost 4, fixed 1,000, operating income 7,000. If sales double, what is the projected operating income? Well, okay, then we just do the same as we did before. Sales double from 12 to 24. Variable cost will also double, so it will go to 8. Therefore, the contribution margin would equal 16,000. Now, that's contribution towards fixed. The rest would be profit. So I cover my fixed of 1,000, and I get my net income at no, not 1,500, 15,000. So my answer here is B. Zane Manufacturing produces a unique valve and has a capacity to produce 50,000 of these valves every year. Currently, Zane produces 40,000 and is thinking about increasing production to 45. Okay? Still within the capacity of 50,000, so we don't have to add fixed costs. What is the most likely behavior of total manufacturing costs and unit manufacturing costs given during this change? Well, total manufacturing costs will increase and unit, yeah, that's true. Unit manufacturing costs will stay the same. No, that's not true. Total manufacturing costs will increase, that's true. And the unit manufacturing will decrease. Well, the unit variable will remain the same, but as it increases, the unit fixed will go down. So that's a likely answer. Total manufacturing costs will stay the same? No way. So that's out. Total manufacturing costs? No way. The only answer here is B. Tire and spoke manufacturing currently produces 1,000 bicycles. The following per unit: direct material 50, okay, labor 5, overhead 14, fixed manufacturing costs on a unit basis is 10, total manufacturing cost per unit 79. Now that's fixed and variable. The plant has a capacity for 3,000 bikes and is considering expanding to 2,000, so they don't have to add fixed costs. What would be the per unit cost? All right, at 2,000. Well, the variable cost would be 2,000 bikes times $50 for material plus $5 for labor plus 14 for overhead. And that would equal 138,000. Now the fixed costs, be careful here. They're giving you the fixed cost per unit. But you see, fixed cost is total and it doesn't change in total. So therefore, the total fixed cost here is 10 times 1,000 or 10,000. So the fixed cost is 10,000. Don't be fooled by the unit cost of 10. When you give fixed costs on a unit basis, always convert it to total cost. So therefore, you have 148,000 total manufacturing costs, and they want to know per unit, so you divide by 2,000, and your answer is $74 per unit. So your answer over here is C. Wheel and tire manufacturer currently produces 1,000. The following per unit costs: direct material, direct labor, overhead, fixed. Again, watch that fixed. Plant capacity for 3,000, considering 2,000. What is the total cost of producing? All right, looked like a similar question, but it's a little bit different. Well, the total cost is variable cost, and that would be 2,000 times direct material of 20 plus direct labor of 3 plus overhead of 6, which equals 58,000. And you have to add the fixed costs. Now, be careful, the fixed cost is fixed in total. It'll go down on a unit basis, but it remains fixed in total. So the fixed cost is 10,000. 10 times 1,000 units. And my answer here is 68,000 is the total manufacturing cost, and that is C. How did you do?